What if I told you that 99% of ICT traders are taught the wrong thing? I'm sorry to be the one who has to break it to you, but the vast majority of ICT traders do not know how to properly determine direction. So in this video, that is exactly what we're going to be talking about. Let's get straight into it. So the first thing that we're going to talk about is the two different types of liquidity. You see, the vast majority of ICT traders are taught that highs and lows is what determines where liquidity rests in the market. I'll make a bet with you right now. If you apply the information that I'm about to give you in this video, your win rate will skyrocket. I just want to make sure that everyone understands that imbalances is just as significant as highs and lows. In fact, the vast majority of traders would benefit more from looking at imbalances when compared to highs and lows. So what we're going to do with this strategy specifically is that we are going to trade towards imbalances instead of away from them. We're not going to pay attention to highs and lows and use that to determine where price goes next. No, we're going to use imbalances to do so. The first example is on Ethereum. We're on a 12-hour time frame, and if you paid attention, you'd be able to see that the market had formed quite a large 12-hour imbalance. Now, most people wouldn't really pay attention to this, first of all, because they're not looking at the 12-hour time frame, and second of all, because they're not using higher time frame imbalances as their draw on liquidity. So what we're going to do now that we've established a 12-hour imbalance is jump to a lower time frame and then trade towards it, because I guarantee you that you will see so much more success once you start trading towards higher time frame imbalances instead of highs and lows. I mean, let me just show you right here. We have a 12-hour imbalance here that got hit immediately. We have another one right here that got hit immediately. Then we have one more here that got hit immediately. And then we have the last one right here that also got hit immediately. So you can see that all these imbalances are getting hit. And people often know that, okay, we are probably going to go up into this 12-hour imbalance. And then I'm going to short it from that. Well, my question is, if you know it's going inside of the imbalance, why are you not trading towards it? There's no reason not to. So what I'm going to do now is jump to a 2-minute time frame. And then we're going to look for an entry towards that 12-hour imbalance that we see up here. Because again, as we established, imbalances are just as significant as highs and lows. So right here, there is not a lot that I am interested in. Let's jump to a 5-minute time frame, and I do see my turtle soup strategy starting to play out. So my turtle soup strategy is essentially highs and lows that are being formed within imbalances. That is how I identify a liquidity sweep. So what I'm going to do is enter based off of this sweep right here, which means I would have been filled already. I'm going to keep my stop at internal liquidity, which is the one that we're seeing right here. If I chose to put my stop at this low, then that would be at external liquidity. My target is obviously going to be that 12-hour imbalance, and all there's left for us to do now is play it out and see exactly what happens. And as you guys can see, I mean, it just played out picture perfect. And the reason why I haven't thought about it is because you're taught to only look at highs and lows. Now, I'm telling you, start looking at 4-hour imbalances and 12-hour imbalances specifically. If you're wondering where I do the vast majority of my trading, I use toobit. Toobit is a great exchange, very simple and easy to use, and their support team is great. And right now, you're in luck because I can offer you 50 USDT for free by simply signing up with the link below. So if you're looking to change your exchange or just looking to grab some free cash, well then toobit is your answer. So let's jump right into the second example, which is going to be on Solana. We're looking at a 12-hour time frame here, and as you might be able to tell, it has created a 12-hour imbalance. Now, if I asked you guys, do you guys think there's a good chance that the market will revisit this imbalance before then moving lower? The vast majority of you would be able to answer yes. Yes, there's a pretty good chance that Solana will visit this imbalance before headed lower. And so again, why are you not trading towards it? Probably because you're taught to only look at highs and lows. Now let's do exactly as before and jump to a 5-minute time frame to look for our entry here. See if we can get a pullback into the optimal trade entry, drawing it from this low right here. And that would have been our fill right here. So let's put our stop at the low and target that 12-hour imbalance and play it out. And there we go. So again, guys, it just becomes much easier for you to determine where the market is headed next once you start looking at higher time frame imbalances. The entire point of this video is that you understand that you don't have to predict an entire day's worth of price action when you're looking for your daily drawn liquidity. You see, a mistake that a lot of traders make is that they will use the daily or the weekly time frame to determine where price is going today, which again just couldn't be any more wrong. And the vast majority of those people are trading a 1 to 5 minute time frame. So the daily chart and the weekly chart has absolutely no saying in your 5-minute trade. Okay, try to predict the next 20 or 30 minutes worth of price action instead of the entire day. And that right there is one of the easiest ways of doing so. Simply wait for the higher time frame to create imbalances and then trade toward those. Let's just quickly zoom out here and have a look together at how many of these imbalances are getting hit. So right here on Solana, we created a 12-hour imbalance, immediately hit it. Right here, we did not hit it. We left it alone. Here, we made another one. We immediately hit it. Here, we made another one. We didn't immediately hit it, but we did hit it. Right here, we made another one. We immediately hit it. Right here, we also immediately hit that one. So, I mean, there are just endless examples of why you should be trading towards these higher time frame imbalances. You know, a lot of people will look at this and say, well, this is not a lot of price action. I mean, the candle closed right here and our target is right here. So is that even enough price action? Well, I mean, if you're trading a 1 to 5 minute time frame, which the vast majority of you are, well, then that's more than enough price action. So even though it doesn't look like a lot of price action, it is more than enough for you to get a trade off. And it's so much more easy to predict this little price action instead of trying to predict an entire day's worth of price action or an entire week's worth of price action. So try it out and let me know if your accuracy improves, because there is nothing that's improved my daily draw on liquidity accuracy than when I learned to trade towards higher time frame imbalances.